Hello everyone, and welcome to episode 1.5 in the Investing for Beginners course. Today is an exciting day because we're going to learn about what you, as a shareholder, can do when you own shares. It's just like Shark Tank, and you are one of the sharks. When looking at shareholder rights, we often divide the topic into two separate parts. First, the side that we actually will consider and use in our investing careers. That involves owning minute parts of companies and not really having any power in the running of the business. Second is the side that is mostly hypothetical. It involves thinking of what would happen if we had more money and could actually impact a company. First, we'll look at the applicable side of shareholder rights. Think about the show Shark Tank. Imagine that the sharks are investors like you or I. Businesses come to the investors asking for money to expand. In exchange, the investor will become a part owner in the company. Easy enough to understand. We've already been over this in other videos. Apply the same concept to the stock market. Investors give money to companies, and in return get a part of it to own. However, unlike the show, where the sharks end up owning anywhere from 5 to 30% of the rising business, most of the time Wall Street investors own only 0.000001% of a company. Here's the big secret. The more of a company you own, the more power you have over the running of the business. Big surprise, huh? Not really. Take a company like Apple, which is valued at $730.6 billion. If I buy 100 shares of Apple at the stock price of $125, I'll own $12,500 of Apple. That's approximately 0.000000171% of the company. 1/100 millionth of Apple. That's nothing. You can't really do anything with that part, apart from being able to say, I'm an owner of Apple, or attending the shareholder conference. So that's basically what you, as the average investor, can do with investing. Now let's see what a super rich investor can do by owning a large portion of the company. What can you do if you own, say, 51% of Apple? Well, first of all, you're pretty darn rich. And second, you're the majority owner, so you can pretty much do whatever you want. You can hire or fire management, decide where the company puts its finances, basically whatever. Similarly, if you own 49%, you're not the majority owner, so you can't really do whatever you want, but you can still do quite a bit of damage. That brings us to the idea of the board of directors. Large companies like Apple have thousands of shareholders. However, no one really has enough power to have any type of effect on the actual management of the company. The person with the most power over Apple is Carl Icahn, and he only owns 0.8% of Apple. That's still nothing. So what's the point in being an owner if you can't do anything? Well, apart from simply profiting or losing from a business, there's a board of directors for almost all public companies. These are people who have been chosen to represent the shareholders as part of the company. They might not be the majority shareholders, but as directors, they together have quite a bit of say in the company's operations. They make decisions that could drastically affect the company, regarding stock buybacks, dividends, and stuff like that. The board of directors is a big part of the business, and they're the people you want to talk to if you're a shareholder trying to make your voice heard. Most of the time, we don't really think about the whole issue of power when investing. Most of us don't have close to the amount of money that is needed to take over a company. However, the idea of taking over companies is not rare. On Wall Street, it's common to see billionaires use their money to buy enough of the company to make a big impact. These are called activist investors, because they want to become active in the company's runnings. They buy large parts of equity, then attempt to install their own people into the board of directors, and use that as a pathway to get into the company and change something. Activists like to find companies that are not doing well, take them over, and reinvigorate the business by completely changing the management. Results can vary with activism. Sometimes, investors install a new CEO who is actually good and turns the entire company around. The stock price for this company would rise dramatically, and all the investors, including the activist, would profit. However, there are times when activists get a bit greedy. They take over a company, install new management, force the stock price up, and then sell all their shares after they've made a good profit. This will likely kill the company, because the drop in share price because of the massive sell orders. To activist investors, power in a company is considered very important, almost as important as making a profit. But unless you're a billionaire, it's pretty difficult to become an activist investor. The point of telling you about them was to make you aware of these types of investors, and to help you understand that having power gives you the responsibility of many other investors. The lesson is, you have power as an owner. If you see a problem in a company, write letters to the board of directors and the company's management. There is more to investing than simply making a profit. If you have enough money, and if you have enough power, then you can be the one who decides the future of a business. This is a subtle lesson that you won't often think about when you actually invest, but all the same, it's a good thing to be aware of. That's one of my goals in this course. Investing is such a broad topic that it's impossible to teach you everything in one course. Instead, it's more effective to teach you what's important and the concepts behind them, and then make you aware of all the other details. That, in the long run, will make you a better investor. I hope this video was helpful and informative, and that you'll keep watching this course and channel. Be sure to like and subscribe, and I'll see you next time when we have a review of Unit 1 and a preview of Unit 2, Important Terminology. Thanks for watching, and keep making money.